Hello and welcome in this video where I will show you how to use the Airbnb business model template and how to customize it specifically to the needs of your business. So the first tab that we can see is called the color coding tab, which will give you an overview on how to interpret the different cells and colors that you will see within the financial model. So for example, we have a different color coding for input cells, which are the cells that you are supposed to modify and that you can actually type stuff in. Then hard-coded cells, these are very rare and uncommon. For example, there is none in this particular business financial model, but it's basically hard-coded stuff. Output models, so basically the result of a formula, a link, whether we are linking to a specific formula or not applicable. Cells color-coded as not applicable should be emptied. So whenever you change something in the model and a cell becomes red, then you should remove the content of that cell. This has been done because, of course, the model is highly customizable, so you can customize it to your business needs. And as we will see, whenever you make some changes to the model, some of the cells might become red, meaning that that particular cell does not apply to the settings or the scenarios that you have created with the previous inputs. And so you should just remove the content. Then there is a tab that displays the table of contents. So it shows you we have a tab for inputs, as you can see down here, with all the assumptions and inputs that you can modify. We have 3 tabs for dashboards with only number, charts, and charts and number. We have financial statements with 3 pro forma financial statements for a period of 60 months. So profit and loss statement, basically the income statement, balance sheet, and cash flow statement. And then we have a valuation where we basically project the free cash flows done by your business over the course of 60 months plus an extrapolation period. And then we bring them at present value and extract an estimate for the present value of your company. Then we have units where we calculate the number of properties over time, revenues, basically revenues from your properties, taking into account occupancy rate, seasonalities, and many other inputs as we will see later. Cost of goods sold, like maintenance, utilities, property taxes, and so on. OPEX, which is operating expenditure, meaning all recurring, but also one-time expenses that you will be able to customize as either a fixed value or as a percentage of revenue. Then full-time employees, so basically your hiring plan, whether you plan to hire someone. CapEx, capital expenditure, so all the expenses are related to your capital expenditure, like for example buying properties to then start your Airbnb business, and then the depreciation and amortization schedule, and then the debt. In case you incur in any debt, you have a tab to see all the nitty-gritty about the repayment, the interest rates, and so on. So the first tab, as mentioned, is the input tab. As you can see, every tab is divided into different sections, and by clicking on the plus button here, you can open that section. So for example, here, general information, you can select the name of your business, Airbnb company, very boring name. But now basically the model adapts as you go through the inputs. So you can select your start date, fiscal year end date, the currency that you want to use, in this case dollar. And once this is done, you can close it or leave it open as you prefer. And select the cash starting balance, corporate tax rate. Unit is known as flat in this case, for example. But you can change it if you want to call it something else, like properties or whatever. And then we start with the quantity of flats. So here there are 2 main options. The first option is that you purchase flats. The second one is that you rent them and then you sublet them. So in the first case where you purchase, then you should insert the property here in flats purchased together with acquisition date, the number of units that you purchased. So this can be a certain type of flat. And so maybe you purchase 2 of that type in February 2024. Then how much you purchase them for, whether you purchase them with debt or not. And if you do with debt, then as you will see, these cells will become yellow, meaning if we go here to the color coding, we can see yellow input, and before it was red, not applicable. So meaning now it will we will be able to insert how much loan we want to use, how much debt we want to use to finance these 38,000 for 2 units. And here you give you have a quick overview of how much debt this results in, which is basically 85% of 38,000 into 2. Then the interest rate that the bank gives you, 4%, for example, and the number of installments. So how many years the loan lasts. Then let's say that you're working on the model and you realize, no, actually, no, I'm not purchasing this with debt. So you say no, and now this becomes red again. And as mentioned, you should remove what we have inserted here. Now, as you go on, you say, okay, in your financial model, you want to purchase 4 flats and you want to rent 1, for example. So, well, let's assume that you have everything clear, like in this case, right? So with the 4th one, it's clear on both, because when you insert something here, flat number 4, for example, then this will become red, right? Because you cannot have the same on both, but you should have, for example, if you want to rent a sublet 1, you should insert it in position 5 because position 1, 2, 3, and 4 are already occupied. And if you insert something here, for example, in position 1, since we already have something here, this will mess up with the way in which the financial plan has been constructed. So, and of course, vice versa. So when you insert something here, so if here it's empty, then here it's yellow because it's still available. But as soon as you add something here, like flat 5, then you should complete here, and here becomes not applicable. So flat rented, you can insert the date when you start rent is more applicable. So when you start paying rent, how many units you rented, how much you pay per unit per month, the number of months that you were allowed to have it for rent. You can actually increase it and do, I don't know, 3 years. And then how much the price that you are paying is supposed to grow over time, if applicable, otherwise you just leave 0. Now that the quantity is done, then that's the pricing. So you open the revenues section and you can see the flats that you've inserted before. You can insert the rental start date, so when these flats actually start generating revenues to you, and whether you expect to increase the price at which you are renting these flats and at what rate. Then here in this subsection, you can select the seasonality. So you can see, for example, rentable day per month. So maybe there are months, I don't know, maybe in August you want to use the flat for yourself. So here you just say 0, for example. Otherwise, you can just leave as is, which is basically all the days in the month. But if for any reason you are not willing to rent it for all the days, you can modify it here. And then you can select the average occupancy rate. For example, in January, out of 31 days available for rent, how many days do you expect to book to rent? And here it gives you a quick overview of the results. So 15% is 5 days. You do 20%, it's 6 days, around 6 days. And then here, unit price, you can select the pricing. Here you can select, actually the pricing at which you are willing to rent the flat. And then this will give you an estimate, a quick estimate, for example, for the average revenue per month per flat by multiplying the total numbers of nights that you expect to rent it out, multiplied by the average price per month, sorry, per night. And again, to adjust for seasonality, you can increase price per night or decrease it as you see fit for any of the flats. Once this is done, you can close it and start with the costs. So cost of goods sold, in this case, here you can select different categories of costs. You can insert additional costs, and when I press enter, you will see that, and then you can fill it here in that case. Otherwise, when you remove it, then it disappears. You can leave it empty. So here are just some sample categories that you can change or add or remove. And then the cost. These are monthly fixed costs. So this is expected to be these prices are expected to be monthly per flat. Then variable costs. So per booked night, again, we have different categories that appear here. And then those are per booked night. So for example, in this case, in January, we have 5 nights booked for the first year. And then we mentioned that they grow over time. But for those 5 nights, so we expect to pay for breakfast, to cater for the breakfast, $20 per night for that flat, and so on for cleaning, supplies, and the other entries. Then the hiring plan, in case you plan to hire anyone, you can add it here with the role, the department that you select here, and then the dropdown will automatically adjust to accommodate for the different categories. So now I've removed the test, and test does not appear anymore. Then you can select salary, start date, when these people are supposed to start, end date, if any, employment taxation, and some salary increase per annum. Then you can close it. Operating expenses. Here we have all the operating expenses, again, with the categories that you can change. And you can then add the expense item, select across the categories that you have inserted here, select the expense start date, the calculation. So whether you want to calculate it as a fixed amount, is it a monthly fixed amount that grows 5% per year, as in this case, for example? Is it an amount per property? So as in this case, for example, or is it share of revenues? This is a drop-down, you select it, and based on your selection, the model will tell you what you should include, right? Because it becomes red, we know from color coding that red is not applicable, and so we know that we need to add share of revenues, a percentage, 5, and then of course we should add also the name, the category, and the start date. But let's assume that we don't want share of revenues, but fixed amount. Then here we can add, okay, 500 fixed amount monthly, that grows 10% per annum. Let's remove it, and final category, amount per property. So how much per property 100 per property, and so this amount will be multiplied. It's like fixed amount, but it will be multiplied by the number of properties. Okay, let's remove here and here. And then we have one-time OPEX, so one-time operating expenditure, or the expenditure that you incur into one time only, like for example, website development, initial setup cost. Again, you can select the category from the drop-down menu that you select here, that you set up there, sorry, then the expense date and expense amount. Then let's close this here. Capital expenditure, in this case, we don't have additional capex because this is in addition to the flats that you have already purchased. In quantity flats here, those are all purchased. So you should just, for example, check the depreciation schedule for the flat. So let's say 20 years, maybe even 30, and then the model will take this into consideration. If there are any other capex that you want to consider, like furniture, for example, for a certain flat, you can select the date of the purchase, the amount, let's say 10,000, and 10 years of depreciation schedule. And then the balance sheet, this allows you to modify as a share of revenues, the inventories, accounts receivable, accounts payable, whether an investor invests in the company or not. Maybe you have an investor that invests, in this case in June, 60,000. So you want to account for that money that comes in, or a bank loan, you ask for a bank loan of 250 to start to buy some of the companies. In addition, this debt is in addition to the debt that you insert here. So the debt that you see here is excluded from the debt that you see here. Then once all the inputs have been inserted, basically, now you can navigate the results of your model. For example, as I mentioned earlier, you have 3 tabs for dashboards. You have a dashboard with only number, with charts, and charts and number. So the one with only number for a given stats, for example, total owned flat, or occupancy rate, or variable COGS, or profitability metrics, or whatever, you can see the numbers. In case you want the charts, you can see the charts here. So again, it's the same categories, but in this case, you have the charts to have a quick overview. And in case you want both, you can find them in this third tab. Then you can see here that you only have a yearly overview, but if you want a monthly overview, you can click on the plus button here, and it will expand and give you a monthly overview for each one of the categories. So in this case, cash, the numbers that you see here are the numbers at the end of each year, fiscal year, while the numbers that you see here are the months at the, is the cash at the end of each month. For example, December 2024, end of month 252, and then end of 2024 252. So it's the same because December 24 is the end of the fiscal year 2024. We also have a tab for financial statements where you can see the pro forma financial statements, profit and loss, again, divided into sections. The first one is profit and loss, where you can see revenues, total fixed costs, total variable COGS, the resulting gross profit, EBITDA, which is gross profit minus total operating expenses, EBIT, earnings before taxes, net income, then balance sheet with total assets, total liabilities and equity, and then the cash flow statement with operating cash flow, investing cash flow, and financing cash flow, and then corporate taxes. We also provide you with a tab with valuation, where basically after adjusting some inputs like the revenue growth rate for the EBIT margin for the extrapolation period, average cost of equity, share of debt, weighted average cost of capital, and so on, you are given an estimate based on the projections of the free cash flows here brought at present value, based on the weighted average cost of capital calculated from the assumptions here. You get to have an implied valuation today, or an estimate for the valuation. If you want some multiples as well, you can find them in the last sections of this tab. So those, of course, are calculated with the implied valuation that you are given from the previous section. And you can see revenue multiple, EBITDA multiple, and EBIT multiple. And then the remaining tabs are basically calculation tabs. So where you can see, if needed, you don't need to investigate those tabs, but if needed, you can see all the calculations and how, sorry, let's go at the start of the model here, and how we calculate everything. So you can see both a yearly view here, and if you need it, otherwise you can just hide it. If you want to see it, you can see a monthly overview here as well. So you can see acquisition of your properties, start of property lease, property owned, property leased, total properties, and so on. And you can see this for units, revenues with flats available, occupancy rate, nights booked, average daily rate, revenues, COGS, OPEX, full-time employees, CAPEX with the flat CAPEX as mentioned earlier, so those that you purchase, and the overall CAPEX that includes also the one that we added earlier, so the furniture with a depreciation of 30 years, and then the same for debt, if you incur in any debt.